The Singapore National Reserves have been called a secret weapon by many people. Thanks to it, Singaporeans are able to enjoy a better quality of life in education, healthcare, transportation, and living environment, while paying a much lower tax as compared to many other countries. They are also the reason why during the pandemic, while many other countries were seeing a case fatality rate of 1 to 4%, Singapore was able to achieve a 0.1% case fatality rate. And yet, little is known about the Singapore National Reserves. Even after watching Channel News Asia's coverage about the reserves, I was still blur as to what's going on, as I found that some of the terms used were either too complicated or too vague. So in this video, I'll be covering everything you should know about the Singapore's National Reserves. What is in it? Where does the money come from? How is it being used? And also, how much is in the reserves? Also, do join my Telegram group to discuss or ask any questions that you may have. With that being said, let's jump right in. So, what's in the reserves? It's basically any asset class that you can think of, such as cash, shares, bonds, private equities, gold, and even lands and buildings. What about cryptos? They didn't mention anything about cryptos. But as long as the assets are worth something and can be converted to money, the government will want to keep it in their reserves. Hashtag diversification. The three names that manage the reserves are Monetary Authority of Singapore, GIC, and Temasek Holdings. All of them are under something called the 5th Schedule, where they are protected by the Constitution. There are also a few more entities in here, such as the CPF Board, HDB, and Jurong Town Corporation. But why are they here? Isn't it just MAS, Temasek, and GIC that manages our reserves? Okay, even though CPF money is the people's money and not the government's money, in the end, it's still the government who's managing our CPF money. So if ever there's a rogue government, they can still take away all our money. That's why they decided to add the CPF board into the constitution to protect it. As for HDB and Jurong Town Corporation, they are in there because they help to manage the lands and buildings that we stay in, all of which are assets that are worth money. Also, just in case you're wondering, the one that was deleted in 2002 is the Board of Commissioners of Currency Singapore when it was merged with MAS, and the other one is MND Holdings, which ceased to exist. So how are these protected by the law? Because they are in the constitution. If ever the government wants to make changes to these entities, they will have to go through the entire constitution amendment process. However, rules will only apply if everyone plays by the rules. That's why back in 1984, the Prime Minister Lee Kuan Yew said this in a rally.
If there is a freak election result and a coalition forms the government, all the reserves are available. The larder is wide open. You can raid it.
So to prevent the government from anyhow YOLOing away all the reserves money, they decided to create something called the two-key system, where if the government wants to use the money in the reserves, they will need the president's approval. So then, how are the reserves being managed? First, MAS, or also known as the Central Bank of Singapore, manages our official foreign reserves. Huh? Now also got official foreign reserves ah? What's that? Can eat one ah? Okay, let me explain. National reserves are all the money and assets that we have, whereas foreign reserves is just a small part of the national reserves. The reason it's called foreign reserves is because they are assets dominated in foreign currencies. So, what is in our foreign reserves? It includes stuff like securities, currencies, and even gold. Yes, there's rows and rows of physical gold that are kept in a secret location. Quick pause. Not only Weibo is giving away free money again, they've further upgraded it. From now till the end of the month, if you sign up using my link down below, find any amount and keep the money there for 30 days, you will get a total of 10 free shares worth up to $100 each. But of course, Weibo is not just about their sign-up rewards. They also have one of the lowest commissions for the US, Hong Kong, and China markets. Weibo also lets you earn a yield on your idle cash with MoneyBoo. They have a regular savings plan to automate your investments, so you don't have to see your stocks every day. It will just up, buy, down, buy some more. Last but not least, Weibo has a learning center and global community which lets you discuss stocks and learn from one another. So sign up to Weibo now if you have not done so. With that being said, let's get back to the video. the foreign reserves have increased over the years, and as of July 2023, the amount is at 452 billion Singapore dollars. But what are all these foreign reserves being used for? Many of the reasons are similar as to why we have savings: to pay for expenses, loan obligations, and being used as emergency funds in times of crisis. For example, because we have the reserves, the Singapore government was able to quickly get the vaccines that we need, and that saved a lot of lives. It was also useful for saving jobs and keeping the economy running during the 2008 banking crisis and the 2020 pandemic. Besides that, there is one more use for Singapore's foreign reserves. Unlike many countries, their central banks control inflation by adjusting interest rates. Singapore, on the other hand, controls inflation by managing the exchange rate instead. That's because Singapore is an open economy that's heavily dependent on trade with many countries around the world, such as Malaysia, China, US, Europe, and so on. Due to that, exchange rates have a bigger impact on prices as compared to interest rates. But how do they manage the exchange rates? Simple. They buy low, sell high. No, seriously, that's what they do. MAS has a team of traders working around the clock to keep the exchange rate between the Singapore dollar and a basket of currencies called the Singapore dollar nominal effective exchange rate, or SNER, within a band. So when the Singapore dollar becomes too strong, that will make Singapore's export more expensive and therefore less competitive. To prevent that, the traders be like, dump it. They will then sell the Singapore dollar, which will weaken the Singapore dollar, and the exchange rate will stay within the band. On the flip side, if the Singapore dollar becomes too weak, they will be like, pump it, by buying back the Singapore dollar, which will strengthen it. So that's the role of Singapore Foreign Reserves, which is managed by MAS. The other two entities that manage our national reserves are GIC and Temasek. Okay, both of them may sound the same, where they help the government invest the money and grow it. But there are a few differences between the two. One, GIC is a professional fund manager that manages the government's assets, which include stuff like proceeds from the government surpluses, proceeds from land sales, and securities issues. Fun fact, this also indirectly includes our CPF money, which are being invested into special Singapore government securities, which are then put together with the rest of the government funds to be invested. Whereas for Temasek, they are treated as a normal investment company, and because of that, they do not get anything from the government other than the initial portfolio that they got back in 1974, which includes DBS Bank, Jurong Bird Park, a hotel, and the Singapore Zoo. They can either sell the assets for money, earn dividends from it, or receive distribution from funds, then reinvest the funds, and in return, the government will benefit when they pay taxes to the government. The second difference between Temasek and GIC is that GIC's investments are a lot safer, or as some people would say, less YOLO compared to Temasek. If you check GIC's portfolio, you will see that about 1/3 of their portfolio is in bonds, whereas for Temasek, they invest in all kinds of companies to try to aim for a higher return, like Roblox, Alibaba, and remember about that U Rewards Club thing? Yup, Temasek also invested in them too. Sometimes they make money, sometimes they lose money, but overall, their portfolio has been steadily growing at 9% 20-year annualized return. As for GIC, because their investments are a lot safer, their 20-year real rate of return is at 4.6%. However, even though the returns sound very little, the impressive thing is that their net investment returns plus the net investment income derived from past reserves contributes to $23.5 billion, or about 3.5% to the total GDP. They call this the Net Investment Returns Contribution, or NIRC, not to be confused with NRIC. At $23.5 billion, the money is as much as the corporate tax contribution, but more than personal income tax and GST. It's more than enough to pay for either healthcare or education or defense spending. Without it, our corporate tax would be doubled, or our income tax doubled, or GST would be raised all the way to 19%. Wholesale. However, just like any responsible government, the government won't spend all that money, of course. Instead, they will just take 50% of the money to be spent and reinvest the remaining 50% for future generations. But why spend 50 and save 50 why not spend more now to benefit the current generation? As suggested by Gupta-san, who argues that the government should consider using the reserves money to help the less fortunate or build up Singapore's presence in new sectors and industries. As it turns out, the spend 50, save 50 rule is the right number because the country's reserves are growing at a 4% rate. By taking half, 2% would go into the budget for spending and 2% goes back into the reserves, which means that both the economy and the reserves are growing at the same rate. Then now comes the question that everyone wants to kaypoh about. How much do we have in the reserves? They will tell you that they can't tell, but we can always make a rough guess. MAS has $452 billion as of July, while Temasek has $382 billion. Meanwhile, GIC has only said that they have well over $100 billion US dollars. It's like when your friend asks you, hey, how much money you make ah? Then you say, oh, more than enough to buy one chai fan lor. Which is like got say, but no say. People are estimating that the total reserves would be around $1.48 trillion as of 2021. But it's just an estimate, yeah. The reason the government wants to keep it a secret is because it will make it easier for the markets to attack Singapore dollar. In the end, the Singapore National Reserve is important, not just because it gives us a better quality of life, but it also provides a safety net for when we need it. And as the Prime Minister has said, once the money is gone, it will be impossible to get it back. As back in the 1970s and 1980s, the country's economy was growing fast and furious at more than 10% and had budget surpluses every year, compared to now where the GDP growth rate is much lower, while needs have gone up. That's why the national reserves are a valuable asset that needs to be treasured because when it's gone, it's gone. Anyway, that's all for this video. Hopefully, you found it useful. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.